Hi, welcome back. Chris again with you and JC Trading. Wanted to go through some silver bullet setups today. Now, silver bullet is a really popular way of trading, and we take a lot of silver bullet trades in our Discord server. Likewise, we also trade inverse fair value gaps. But I think quite often they get overcomplicated and people add too many confluences or too many variables into the mix. So there's been a few recently in the last couple of days that have been really clean setups. So I wanted to share with you what we're looking for when we take a silver bullet trade and how we manage the trade as well. So there's one on my chart at the moment. This is gold. I unfortunately wasn't on the charts for this, but some of the members in our Discord group did take it. So this is, but that's by the by. What I wanted to show you was the actual trade. So what's the first thing that we look for when we're looking for a silver bullet setup? And that's a liquidity sweep. So all of our trades start with liquidity and end with liquidity. And by that, I mean the very first thing that you're looking for is liquidity to be taken. Your destination, your target, if you like, is where the next area of liquidity would be. Now, with silver bullet setups, it's quite easy. So we have some ranges set up here. And these ranges are the session times, the exchange times. So I'll just show you what they look like. So that's my session times here. We've got Asia, we've got London, and we've got New York. This is the Lux Algo sessions indicator, and these are the times. I'm currently on UTC +1, and my chart's also on UTC +1. Obviously, your time zone may differ. You would just need to adjust it accordingly. The timings themselves are relatively important, but that's not the be all and end all. The reason being is that we're just waiting for liquidity to be swept. So whatever times you've got as your session times, you're waiting for those session times to be swept. Now, there are some that are set in stone, London and New York for argument's sake. The ones where people get slightly vague on is the Asia, sort of Sydney and then Asia ones. But those times are the times that I use. So the very first thing that we're looking for is either a range high or a range low to be taken. So in this instance here, we had a range low taken, which was there. So this is our previous session low. I'm not interested in what session it is. I don't care if it was the previous was London or New York or Asia. Makes no difference as long as it's a range low. So we take a range low. Now we're waiting for a market structure shift. So we're waiting for a close above this point here. The reason being is that this was the high or the lower high that put in that low. So we need a candle close, not a wick. We're waiting for a candle close. So if we put a line across here, what we're waiting for is a close above that line. Once we get that close, which was on that candle there, we've now had a market structure shift. We were going down and now we're going up. We also need an extreme fair value gap. So in this instance here, we've got a fair value gap down the bottom here. So what are we waiting for? Simply a retracement back into that fair value gap. That's it. Once you've got your limit order set, so your limit order could have been set after this candle close up here. Once that candle close, you can place your limit order. I always suggest you go just above or below the fair value gap. Depends if it's a buy or a sell. The reason is sometimes these are so accurate, the price will come down, just touch the top of the fair value gap and take off. And if your limit order is on the top, sometimes you're not triggered. So I would say set your limit order just a little bit above the fair value gap, around there. Now, stop loss placement is really important as well, because quite often with a silver bullet, you'll get a secondary sweep. What's a secondary sweep? Let me show you. So we got entered into our trade here, and the low, the sweep, is over here. So if you notice, my stop loss is not on the low itself. It's not on the bottom of the sweep. And the reason being is that more often than not, you'll get tagged into a trade, it might move away, and then you come back and you'll get a secondary sweep. And if your stop loss is absolutely nailed to the bottom of that low, you'll get taken out. So what we do is we allow a small buffer around that, so that if that does happen, in this instance it didn't, well, technically you had a sweep of the tap in, but sometimes it will come all the way back down to this low. So if it does that, I'm still in the trade. So that's what we're looking for to get into a trade. What are we looking for to get out of the trade? When a range low is taken, we're looking at opposing range liquidity. So if a range high gets taken, we're looking at the low because that's opposing range. So the opposing of a low is a high. So we look to that session high, which is there. So we've taken the low, we're going to target the high. Once you've got tagged into the trade down here, obviously this was a limit order set just above the fair value gap. Then what we're looking to do is leave a buffer for the low or the high, so that if we do get a secondary sweep, and we've now got a target here. Now that trade there was a 1 to 4.7. I typically go break even around 1 to 2. So at 1 to 2, which would have been around there, I would have gone break even. Then at 1 to 3, which would have been around there, you can either take profit or you can start to trail your stop loss up. Now, this is where this trade gets quite interesting, because at 1 to 3, that is where you can either take profits, depends if you've got a trailing drawdown or not, or you can just set a hard TP up at this high here, or what you can do is what I mentioned earlier, which was trail. So when you get to 1 to 3 there, what you would then do is place a line. You've probably heard me go through this on the channel a few times. You place a line on your higher lows, because obviously we're going in an uptrend. So you place them on the higher lows. So in all the time that you don't get a close below that line, you're in the trade. The next higher low is there. So we placed our virtual stop loss here. So the hard stop loss in MT4 or in Tradeovate or on TradingView is at break even. But this is a virtual stop loss. So the next time we get a higher low, you would then put your virtual stop loss there. Have we had a close below it? No, we haven't. And then we've made more structure up here. So that's now our next higher low. So as it stands at the moment, you're still in this trade. So rather than taking your profits at a fixed 1 to 3 down there, or taking them at opposing range liquidity, you could now be, well, you could have gone all the way up to, if you tapped out now, that's a 1.675. So your R's would have been, if you a 1 to 3 would have been around, sorry, that there would have been your 1 to 3. That there, if you targeted opposing range, would have been a 1 to 4.75. And if you cashed out up here, it would have been a 1 to 6.63. So huge difference in your R rewards. So, and this is how I trade. I trade with virtual stop loss. So I will stay in that trade until I get a close below that line. And next time I get a higher low, I simply move it up. So it's gone from there to there, to there, to there, to there. And until you get that close, you stay in the trade. So that's a trade on gold. We've also had a really clean one on EU as well. Now, all of these are doing exactly what they're supposed to do. And that is their textbook. Because the first thing we're looking for is a sweep of liquidity. So we've just touched on range liquidity. That's our range low over there. This is a sweep of our range low. Now, what's the next thing we're looking for? A market structure shift. So we're coming down. We now want to go up, because a silver bullet entry from a range high or low is a reversal trade. If you're coming in from the top, you want to be going up. If you're coming in from the bottom, you want to go down, because we're reversing. So we're currently coming down and we've swept that low. So we're waiting for a market structure shift. Well, that occurs here, just above that level there. So when we've got a candle close here, that's our market structure shift. Do we have an extreme fair value gap? Yes, we do. And this one is a really good example of why you set your order just above the fair value gap. This is how deadly accurate this strategy can be if it's traded properly. So we've had our liquidity sweep over here. We know we've had a market structure shift. Let's get rid of that grey line. So what happens next? Well, we place a limit order just above the fair value gap. And you can see how deadly accurate these can be. That wick has barely gone into that fair value gap. So entry would be just above that fair value gap there. What are we targeting? Well, we know from what I've just gone through on the last trade, when we take a range low, we target the range high. So in this instance here, sweep, structure break, extreme fair value gap, and then we're targeting opposing range. That's our opposing range. So this was a trade that was tagged in first thing this morning. Gold was a trade that was tagged in this afternoon. So these aren't, I'm not cherry picking trades for you. These are literally, this is almost real-time price action. So this is another textbook one where we've had the sweep, we've had the market structure shift, we've had the extreme fair value, and we've targeted opposing range. And look, it moved all the way up perfectly to opposing range. Then it's danced around here for a bit, and then you've had a secondary push up. So that's just 2 trades today alone that use Silver Bullet. That's how we trade them. We trade live every day, as you know. We're in a Discord server. The link for that is in the bio. If you want to follow us live and ask questions about this type of trading, pop over and join. We're also running a mentorship program, and it runs every 5 weeks or so. It's a 4-week course. There's another one starting this coming Friday. Today's the 24th of September, and it's starting this coming Friday, so 3 days time. We go through everything on the mentorship. It's 4 1-hour sessions, 1 to 1.5 hour sessions, and we go through everything on how we trade. That is entries, exits, the inverse fair value gap strategy, and the silver bullet, which is obviously the silver bullet is what I've just shown you today. Trade management, risk management, what we're looking for, what will make us avoid a trade. And that's really important because we always focus on the trades to take, but the ones that you shouldn't be taking are the ones that will often preserve accounts. This strategy that we teach, along with the inverse, will pass prop firms easily if it's done properly. So we offer this mentorship. It's starting on Friday. It's £295, so very good value for money. You're getting a huge amount of tuition. We don't believe in video courses. They're crap, I'll be honest, absolute BS. There's a reason why we have lecturers in universities and classrooms, and that's because we need to, as humans, we need to ask questions. Your brain works differently to mine, works differently to the next person. These are fully interactive. The mentorship has only got 6 people on it. You can speak, so verbally ask questions, or you can type it in the chat. Everything is explained until you absolutely are 100% sure what it is that you are doing and all of your questions have been answered. We also offer one-to-one sessions if you really want to take it up to the next level. That is just you and either Johnny or I, you pick, and we go through everything, but it's completely bespoke around you. So we go through all of the training, but by the end of it, you've also got a tailor-made trading plan that will be based on the sessions you can trade, what you like trading, what you don't like trading, if you like the silver bullet or you prefer the inverse fair value gap, if you've got trailing drawdown, if you haven't got trailing drawdown, everything and then some is factored into it. And the reason we do this simply is what I've just touched on. I don't believe in video courses. I could easily make a video course now and sell it to you for £500. It'll probably leave you with more questions than answers. And that's just because of human nature. So that's how we trade. So that was a quick insight into the silver bullet strategy, 2 from today, 1 on EU, 1 on gold. I hope you've enjoyed the session. If you've got any questions, let me know. Please feel free to join the Discord. It's free. There's a link in the bio. So hopefully see you there. Failing that, drop a comment below. Obviously like and subscribe. It really, really helps. Click on the bell and you'll be notified when the next video gets uploaded. We're going to be doing a lot more of these kind of tutorial type videos in the coming weeks. So if that's something that's of interest to you, click on the bell and you'll know when we upload. Thanks for watching. If you made it this far, well done. And I will hopefully see you on the next one. Cheers.